overbought, or cash cow. Before we start, don't forget to hit the like button, subscribe, and click on the notification bell. The SPDR S&P 500 ETF Trust stands as a cornerstone for investors aiming to harness the dynamic breadth of the U.S. equity market by closely following the S&P 500 index, which comprises 500 leading U.S. companies across various key industries. This ETF offers exhaustive access to top-tier domestic companies, reflecting a robust mix of sectors that drive the American economic engine. It serves as an essential instrument for investors seeking to capitalize on the resilience and growth of major U.S. corporations, providing both depth and diversity in a single investment vehicle. You can see the SPDR S&P 500 ETF Trust's asset distribution across its top 5 sectors. Technology leads with 30.50% of net assets, followed by financial services at 12.65%, healthcare at 12.42%, consumer cyclical at 10.48%, and communication services at 8.93%. This distribution underscores the ETF's substantial exposure to diverse, influential sectors. The SPDR S&P 500 ETF Trust, symbolizing a core staple of the U.S. stock market, maintains an advantageous total expense ratio of 0.09%. This ETF stands as an efficient choice for investors aiming to reflect the performance of the broader U.S. equity market. Over the past year, it has demonstrated a volatility rate of around 12% in USD, categorizing it as a moderate risk within the equity sector. Noteworthy achievements include a year-to-date gain of 10.51%, significant 29.65% increase over the last year as of March 2024. These robust performance indicators highlight its potential to provide strong returns, presenting a compelling option against its competitors and the S&P 500 index itself. In this concise overview, we compare 3 leading S&P 500 ETFs: SPDR S&P 500 ETF Trust, Vanguard S&P 500 ETF, and iShares Core S&P 500 UCITS ETF. The SPDR ETF, with a TER of 0.09% and assets of $536.15 billion, offers robust market exposure. The Vanguard ETF stands out with the lowest TER of 0.04% and the largest fund size at $1.11 trillion, highlighting its efficiency and investor trust. Meanwhile, the iShares ETF, with a TER of 0.07% and $75.56 billion in assets, is a significant choice in international markets. The SPDR ETF, although slightly more expensive than its competitors, remains a formidable option for comprehensive U.S. equity market exposure. In 2024, the U.S. economy is anticipated to demonstrate resilience with a projected growth of 2.8%. Even as global inflationary pressures begin to ease, prompting the Federal Reserve to potentially reassess its monetary tightening strategy. The investment climate remains nuanced, influenced by domestic political shifts and international policy developments, which might sway market sentiment and asset valuations. The SPDR S&P 500 ETF Trust, with its broad exposure to top U.S. companies, provides a solid foundation to mitigate such uncertainties, presenting a compelling choice for investors aiming to capitalize on American corporate growth. Investors should remain vigilant of these evolving economic conditions, as they significantly impact market trends and investment outcomes. The SPDR S&P 500 ETF Trust adeptly manages the intricacies of economic cycles, shifts in interest rates, and global trade tensions, which all have potential impacts on investment returns. Prudent investors endorse portfolio diversification to shield against possible downturns, frequently incorporating a variety of asset types to enhance financial stability. The prevailing sentiment among experienced investors is one of cautious optimism, with a focus on wise asset allocation to navigate economic and geopolitical challenges. It is crucial for investors to remain well-informed and adaptable, tailoring their investment strategies to the shifting global economic context. This proactive approach is designed to capture growth opportunities while effectively managing the risks associated with market volatility. Personally, I do not currently hold any shares in this ETF, as I tend to prefer exposure to a broader range of countries, albeit still developed ones. However, I do not rule out the possibility of considering a long position in the near future, perhaps after a correction from the recent price increase. I certainly recognize the exceptional reliability of a well-diversified ETF across the main sectors of the world's most significant economy. This video is not personalized advice for the viewer. We are not licensed financial advisors nor real estate brokers. This video is neither a personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective information and commentary. Any third-party content I show should not be deemed or endorsed by me. This video is not and shall never be deemed as a reasonably sufficient information for the purpose of evaluating a security or investment decision. Always do you own due diligence and verify any single information provided at your end before taking any investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I may personally hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer. Thank you so much for watching. We will see you on the next one. Goodbye.